Zoom. Hello and good morning, everyone. Welcome to the Top Down Analysis live from Value Flow Trading Hub. We're excited to have you here as usual. With me is my colleagues, Lekon, the Gold Master. We have Abby Dollars, the Queen of the Commodities. We have Double Global, the Master of Indices, and we have my humble self, CJ, with you. So, as usual, we are starting the top-down analysis. 8:30 is the time, and we urge you all to sit tight, buckle your seatbelts, and enjoy this journey as we take you through the analysis of major benchmark currencies and also major currency pairs. We hope you're having a wonderful week already. And as we head into the weekend, before we commence this top-down analysis, I would want to plead with each and every one of you to take a 2 or 3 minutes break and go to your various handles, your Instagram stories, WhatsApp status, or any other Forex group you belong to, and kindly share the link to this TDA with your friends. So we're going to give you like 2 minutes to do that. You're going to see the link to the TDA on our Telegram groups, and you're going to also see it in this live chat in a few seconds from now. So we urge you all to take a break, a 1 or 2 minutes break, and share this link with your friends. Share it with your Forex friends, share it with those who you know are trading Forex, share it with any Forex group you belong to, anyone at all. If at all the Mr. Joel, no, we've not gotten to that stage yet. Just make sure you share it, just share it. In fact, share. Yes, I agree with you, Mr. Joel. Share it with anyone who you know is trading Forex. Any group, if they shout at you, okay, maybe we'll reduce it so we don't end up spamming them, right? But share responsibly if you want to. All right, so let's just use 1 or 2 minutes. We've spent 1 minute already, so let's use the next 2 minutes to share this on our various WhatsApp group, WhatsApp status, Instagram story, any Forex group, whether it's on Telegram, on Facebook, on WhatsApp, anywhere. Even in your village meeting, if you have people that are trading Forex there, share it with them so that they will join you. Okay, so I believe most of us will have shared by now, and we'll be resuming already. So, as usual, I would have loved to call everyone who is here, but we may not have enough time to do that and then get back to the call for today. But maybe in some other time when we'll have enough time, we'll be able to do that. So straight up, we're going to Dixie, and we're looking at it on the daily time frame. Now, this week has been void of fundamentals, so there's no volatility in the market. We've not been seeing the market push as fast as we would have wanted it to. On some days, you check the chart, you see it just ranging a little and not moving so fast. So far, as of today, the only target we had on the daily time frame for this week has been achieved. All right? If you can look right here, I don't know why our markups keeps disappearing, but would still remember, or as at Monday, we said the Dixie is going up to clear this high. This is what we want to see the weekend. We want to see the weekends at the Dixie clearing this high and returning to this former resistance right here. Okay, so we can see that the Dixie did one of the things we wanted it to do. It broke the high, and it also made an attempt to come back to this low right here. So we want to see previous resistance. Stop your share. So I know you can see my screen now. So I'm going to go over it again. We apologize for that. We believe everyone can see now. So back to what I was saying. So let me clear off some, um, we'll start from the beginning. So I was talking about the Dixie. We had two projections for the Dixie this week. We said the first projection was for the Dixie to break this high right here. Okay, you can see it outlined with the orange line, the one above. And the second projection for the Dixie was to retrace into this previous resistance. We want to see this previous resistance turn to a support. That's what we said we want to see for the Dixie. And we've seen it do the first one. So the first objective was achieved. Price went above this high and closed above it. Now, in previous TDAs, we've already stated that the kind of break of structure we want to see is when the candle closes above the previous structure that we are making reference to. Now you can see that the candle didn't just wick above this high, it closed Back up. All right. Sorry for the breaking. Sorry for the short break. We had the technical glitch, and just like we said in the chat, we truly and sincerely apologize for that. One of the things that we experience when you're working with technical equipment are things like this. Unforeseen circumstances can come up even beyond your preparation. So we truly, truly apologize for that. Sound has returned, video has returned, and visuals has also returned. So we're going to be proceeding with the top-down analysis. Now we are looking at the Dixie on the daily time frame where we said that we wanted to see the Dixie return to this place. So in summary, for the daily time frame, our objective for this week has been achieved. The first objective for the week has been achieved, where we said we wanted to see the Dixie close above this high. The second objective was for the Dixie to return to this low, and it hasn't done that. So maybe this week going into next week, we may see the Dixie make a trip to this place. Why are we interested in seeing the Dixie make a trip to this place? There is a fair value gap, a very tiny fair value gap, and also an order block. And then around this fair value gap, there is the old resistance. So we want to see the resistance turn to support. Okay, we want to see that same resistance level turn to support level before we now start going long on the Dixie. However, because we do not own major stake in the market, we may see the market start reversing from where it currently is. So for us to take advantage of that, we'll be looking at our hourly time frame from the 4 hours to the 1 hour to see if we are being triggered for a buy. We want to see buy triggers around those time frames, the 4 hours and the 1 hour. Okay, so this is the level where we're saying we're anticipating the Dixie to come to. So based off the 4 hour time frame, we may see the Dixie return here. But if it doesn't, we want to see it start pushing up from where it currently is. Okay, so we'll also look at the 1 hour time frame to gain more insight. Now, looking at the 1 hour time frame, we are seeing that the Dixie is not yet clear. It's not so clear on where it wants to go to now. So we'll just wait patiently. Emphasis on the word patiently. Beyond waiting, we should be able to keep our hands tight and wait for the Dixie to achieve its objective. So the second objective is for it to trade into this zone. Now, mind you, we're not talking about just this straight line as the zone. We want to see it come somewhere around this line, most likely below it. All right. So if we see the Dixie make a trip to this level, somewhere around here, we'll be waiting for buy confirmations from the 1 hour and then maybe the 30 minutes time frame for us to start buying. So first objective achieved, second objective still in play. So that is all for the Dixie. We'll be looking at it maybe going short today because, like I said earlier, there is no much fundamentals on the Dixie. So we may not, there's not much fundamental on the US side of things. So we may not see enough volatility to push it down one way. So it may take a lot of time and struggles for it to get down here. But as it stands now, the Dixie may be making its way here. So those who are scalping, you can scalp a sell of the dollar all the way to this level. This is what we are looking out for today. So if we're scalping the dollar all the way to this place. Now, what is the implication of this Dixie analysis on other currency pairs? We'll have to look at GBP USD and Euro USD to find out the implication. Now, looking at GBP USD on the daily time frame, we have a very clear direction of where we want price to go to. Definitely on GBP, sorry, this is Euro USD, I beg your pardon. So definitely on Euro USD, we want to see price come further downwards. Now, one thing that price has done here is to create a liquidity. And as usual, we usually tell you that most times price will create liquidity to come and consume it in a later time. So it has created liquidity right here. This double bottom you're seeing here is the liquidity that has been created. Next, we want to see price take out that liquidity. But before it does that, price may trade further higher to gather momentum to start coming further downwards. Now, where are we looking to take our sells from? Somewhere around this level. In previous analysis, we've highlighted it. that somewhere around this level, we want to see price trade into it and then start selling off from there. Okay, so we'll be looking to buy the Euro USD all the way to this level and then short it downwards all the way to 1.07261. All right, so that is our outlook for the Euro. The last analysis that we had for the Euro, we called out a sell, which was somewhere around here, and you can see how it sold perfectly all the way to this level. Now, it couldn't break this low, and instead it created a double bottom or a triple bottom, giving us some liquidity points to look out for in the next sell. So currently, the Euro USD is on a retracement to the upside. We want to see it trade all the way to this level. Since it's refusing to go further downwards, we want to see it trade all the way to this level and then starts going back down. So using our path tool, we can draw something like this. First point, second point, third point, and then the fourth point, we can't see it currently, so we just leave it like this. All right, so this is what we want to see play out on the Euro USD. And when we say we want to see something play out like this, we're going to be trading in line with this direction. First is to trade all the way upwards, and then second is to now break this structure to the downside. So from today going into the first half of next week, we want to see Euro USD trade all to this place and then sell off. We're not saying we are bullish on Euro USD. We are bullish on short term. We're short term bullish on Euro USD for the retracement, and then long term we are bearish on Euro USD. I hope that is clear. Now, looking at the GBP USD, it has been in a very wide range for a couple of days and finally got some momentum to break out of the bondage that has been holding it all the while. And that bondage made people to abandon it. You know, when you are in bondage, literally, good things will abandon you. Good things like me, good people like myself, I abandoned it. But now it has broken out and we may be seeing some entries for GBP USD. However, we would want to wait for the retracement to finish. Usually when price breaks out of a consolidation level, it would find some retracement to give us a retest to that consolidation level and then start going short from there. All right, so this is the retest that is unfolding on GBP USD. To get more perspective, we are looking out for similar thing on the Euro USD. So almost the same thing that we're looking out for on the Euro USD is what we're looking out for on GBP USD. So the first point of call is somewhere here. Okay, this is the first point of call for GBP USD short. The second is this left shoulder. Using the box strategy, this left shoulder all the way up here. So two things may happen: either price trades into this IUFED right here or into the left shoulder. So for that to happen, we have to be going long on GBP USD intraday. All right, so we're going long on GBP USD. Once we see another entry again, we'll go further long on GBP USD until it trades here. The moment it trades into this first point of interest, we'll become careful so that we are not trapped and then market finally goes all the way up here. All right, so since there are 2 points of interest, we'll be terminating our buys on this level. So if you see any retracement on GBP USD, you can go long and then terminate the buy somewhere around 1.27000 levels. Okay, so that's what we're looking out for. Let's look at the 1 hour time frame to see if we're going to find an immediate setup. Currently, from where price is, it's a good place to buy GBP USD, but then you may struggle to find where to put your stop loss, because if you put your stop loss somewhere around here, price may come to grab all this liquidity residing here. Okay, so if you would want to trade this setup, currently looking at what GBP USD is doing, it's a good place to buy. If you want to trade it from where it is, you may have to use a smaller lot because you are counter trading. You have to use a smaller lot so that even if you are stopped out, you are not stopped out with so much. All right, so for this TDA, the call we're giving out is GBP USD buy, stop loss 20 pips, 20 pips stop loss, 40 to 50 pips TP. Okay, so this is the final point we are expecting GBP USD to trade into. All right, so for those who like to refine things, you can go to your smaller time frame and refine it. But for this setup, we would like to use the 1 hour time frame. Although the trade is looking like it has gone and left us, but it still has a long way to go, about 50 pips. So you can wait for a retracement and then enter so that your stop loss is tighter. All right. So if you are not comfortable with this setup, wait for a retracement and then enter to trade it all the way up here. Remember, use a smaller lot because we are trading against the trend. So use a smaller lot, knowing that anything can happen while trading against the trend. So for me, this is the setup that I want to see on GBP USD. Maybe it already started during the course of this TDA, so we are already left behind. I would have loved to enter somewhere around here. Okay, so this would have been the ideal place to enter, around 1.26240 level. That would have been the ideal place to enter. But as price has left us, we would want to wait for price to give us a retest. All right, we would want to see a retest and then a continuation. Okay, so if you have a large enough capital and you can use a smaller lot, you can use 20 to 30 pips to grab 40 to 50 pips to the upside. So this is our trade call for GBP USD. Remember to trade cautiously as you trade this current setup. All right. So at this point, we're going to be looking out for this trade. Whatever the outcome is, we'll definitely let you know in your various Telegram groups. Okay. So while Mr. Lekon comes up to take us on the gold analysis and the yen analysis, those of you who are just joining, like we told those who came earlier, kindly share the link to this TDA. It's already on the chat box and it will be coming up again in a few seconds. So share this link to the TDA. The TDA is free. There's no qualification to be part of it. So share this link with your friends and your loved ones so that they will partake of this juice that you are sipping for free.
All right, thank you, CJ. Whoever is on this TDA and he or she has not shared the link and he or she is taking our trades, that person is a T-Mog. Yeah, T-Mog. Very true. So, good morning, everyone. Good morning, good morning, good morning. All right. Thank you, Mr. Joel. Share everywhere. Just share it. Thank you. Yeah, just a quick one on what we have on gold yesterday. Yesterday was a sweet day for gold, you know, just that. Yes, a very sweet day, both the buy and sell. If you are following our analysis, I don't know where the markup ran to. So run away. All right. I would have showed us well, I'm still going to do that. Let me quickly do that now. Just a quick recap of what happened yesterday on gold. You know, yesterday we are looking in the morning, in the course of the TDA, we are looking to buy gold. And at the same time, we already mark out our level for the sell. All right. So let's quickly take a look at that. Yesterday morning yesterday was 15, yesterday was 8. Yeah. 8. All right. So this was the trade yesterday. Yes, yesterday morning, this was when we were having a TDA somewhere around this place. So we look out for a buy set up for gold, and you are going to see later it forms that buy, which was very clean. If you look at it on the lower time frame, the entry for that buy was on a 1 minute time frame yesterday. Let me zoom in so that we all can see it. I don't know how our markup disappeared here yesterday. All right. I just want to show us how the market moved yesterday, very quick, and we're going to see that clean. All right, so this was the move yesterday. Yes, this is it. Yesterday morning, the buy we were looking at yesterday. So we are going to see that here. For those trading gold yesterday morning, yeah, this is it. Now, yesterday morning, this was what price did. After TDA, you see the low. This was the sweep of it yesterday. This was the sweep of that low. This is it. And we see price came to sweep it out here, somewhere around this level here. Can you see it? And price came back and tapped into it, leaving a fair value gap in between this place. And price came back, tapped into it. You set a pending order there, activated the pending order, and moved all the way to the upside. That delivered about almost 100 pips yesterday. Yes, almost 100 pips to the upside. And also on the lower time frame, you remember yesterday on the lower time frame, we were expecting price to, sell all the way to the downside. Now, this is it. This was where we marked that day. Yesterday morning that we were expecting price to sell from. We marked this level. Let me show us once again. This was the shoulder, and you can see the sweep and the forceful break to the downside. So we mark this level that price should, when price comes to that level, and remember our SL is just less than 7 pips, that when price enters into this zone, we are going to short gold. So yesterday afternoon during the Asia session, before the Asian session, that was around 11:35, yes, in the morning, New York session rather, in the morning, we just saw price tapped into the zone, and because of this fair value gap here, you see it, price just tapped into it, and all the way it collapsed to the downside. All right, so if you follow yesterday's move on gold, that will have been a very sweet and clean entry for you. That will have been a very sweet and clean entry for you. However, the buy that is happening currently now, if you look at it on the 15-minute time frame. Now look at what's happening on the 15-minute time frame. You see the low, this is it. We've seen a sweep below it and a forceful break to the upside. So if you truly want to join the buy, you should look at the recent low, which means there is high tendency when price gets to this place. Price already built liquidity below here. So I am suspecting price may just tap and clear this liquidity, one, or we are going to see price, when it comes back to this level here, you see that clearly on 5 minutes. This is it on 5 minutes. You see it now. So price already broke. When price sweep this level here to the downside, broke it up, and we may see price come all the way into this low, then reverse up again. However, that place is a very juicy area for price. So we can see price tank all the way to the downside and come and use this as the shoulder, this level here. Price will come and use this level here, 2023, as the shoulder for it to reverse back to the upside. And we can see inside it, we have a fair value gap here that price has not really tapped into. You see it now. So this is a very juicy area for price to come to, this place or this place. So this should be a good area for you to buy if you want to buy, and also this particular level. Now, just a quick overview of what is going on the daily time frame for gold. Now, on the daily time frame, we are still seeing gold, just sitting inside that range. And, yesterday we marked this other block that's where we still expect price to come and tap into. Let me mark it again. So we are going to take note of that. So we expect price to come all the way to tap into this other block here. Like we said, that's it. So if you want to take any trade on gold today, take more of a sell trade when you see your clean entry pattern. You get the point now. However, you can see that it seems like the dollar is a bit weak. So if that is showing us that dollar is weak, then all we should look out for is a gold buy if dollar is weak. You get the point now. So those are the two opinions on ground now as regard gold. And if you look at it on 1 hour time frame, you're going to see on 1 hour time frame, the price action there is very juicy. We've seen price broke this low forcefully to the downside, but price has not really come back all the way to this shoulder. So I am still suspecting gold would rally all the way to this shoulder here. You're going to see gold rally all the way to 2038. Really suspecting that. So if you want to short gold, you can short from 2038 level. That's what I'm suspecting gold will do. You just see it, boom. You see after this sharp break, you see it, boom, and just see it. You just tap into this place and reverse. Yes, someone will say where price is now is a very good place to sell. Very good place to sell, but it's a very high risk sell if you want to sell. It's a very high risk sell, but it's very good. It's a good place to sell. Price is actually in a very good place to sell. And even if you look at it on 1 minute time frame, this 3 minutes rather, you already see the sell pattern. This is it. First will break to the downside. Price came back to the shoulder, follow it down. It's forming another one again. This is it, follow it down. But you see that when price leaves this place, there's no, that momentum is not that strong. Like, you know, if gold would sell, its sell is just like pouring water at a time. You see what is that? That is, but the way it's doing it here is of a very big concern. So I won't just jump into it now for the sell. You get the point now. So let's see clearly what price would do. Instead, that high probability trade on 1 hour will give a very clean move to the downside. All right. So for the yen basket, you can see that, let's see yen basket from the daily time frame. Yen basket, yeah, you know, yesterday we said that we are looking yen basket high tendency of particular low here, and that's what price did yesterday, but just react from that level. Now this morning we are seeing a sweep of that low, grab of liquidity, which implies that every other yen pairs currently should be rallying. Get the point now? They should rally. Now, if you go to GJ, you are going to see this reaction happening now. You're going to see it on GJ. And if you come to 4 hour on the yen basket, see it now to the downside. Liquidity is being swept currently now. You can see price is sweeping this low. Now, also on 1 hour time frame, you can see what's going on. Clear break to the downside. So that is showing us a move on GJ. If we look at GJ now, we should see GJ bullish. You get it now. So let's check GJ. Great. You see it now. So we should see this is what we are expecting. And remember, yesterday we were looking at GJ to just pull back a bit so that we can join the buy. But so unfortunate, the guy did not really come back. Just did one small move. Yes, something around this place. Just see it somewhere here and push all the way to the upside. Does that make sense now? So if you want to look at it on the lower time frame, where should I join the buy if it would work? You get the point now. Now, if you look at it, this is really the good entry for the buy yesterday, 3 p.m. This was a very clean entry for the buy. You see it now, first will break, price came back here. It's a very clean level for the buy yesterday. So you can always follow that level and take it up. Get the point now? Yeah, so that is it. If you have any question, please let us know. Any question. And remember, always share the link to this TDA. All right, gold. Okay, yes. What I'm saying for gold, our analysis for gold is this. Look at it. We say that on 1 hour, this is a POI for gold sell. disappearing. All right. This is our POI for gold sell on 1 hour. However, on the lower time frame, we see on 3 minutes that this is our entry signature for the sell when price broke this place and came back all the way to this place for a sell. We see it there and you can see it again. But like I said, where price is now, if you look at it on higher time frame, you can see it's more juicy. So there is high tendency gold should still rally all the way to this place, all the way to 2038 before it sell. You see it now. So I am still expecting gold to rally all the way to this level here. As a matter of fact, we just rally and clear this liquidity here. So if you want to sell here, just make sure price tapped into this level. If it can clear this liquidity, but your SL will be a bit above this level, then you follow it to the downside. Now, when you follow it to the downside, where are you looking to take your profit? Now, your take profit would be around this place. Your take profit should be somewhere around this level here. You know why I said that? Because there is a lot of liquidity here. Price will come and take it out. But when price gets here, this is more of a buy signature. When price gets here, we may see price just react all the way and tap back, like just start buying back to the upside, knowing fully well what DSY is doing. So this is what exactly, this is it now. This is it. So this place is more of a buy zone. So if you want to sell gold, look at the level you can sell it from. Yes, where it is right now is more of a sell region, yes, because there is a lot of liquidity here. However, there's also liquidity above. So allow price to come into our POI somewhere around this place before you short it to the downside. All right. So that's our analysis on gold. Yes, sir.
Good morning, Lekon.
Good morning, sir.
Let's see that 1 hour again. Yes, he said, what is our bias for gold again? I'm a bit confused. Let me say this. Good morning, Mike, and everyone on the floor. Good morning, Nee. When you're analyzing a currency pair, right, and you can see a clear case for a buy and a clear case for a sell, that pair is in a range. There are two things you can do. Wait for the pair to come out of the range, or take the trade you feel is your bias with a reduced lot size. I always say this, the market is 50% predictable. The market is 100% predictable 50% of the time. And it is 100% unpredictable another 50% of the time. Meaning there will be days you come to your chart and you'll be like, this is what the market is going to do. And it really has no other place to go than to do that. There will be days when you cannot say what the market is going to do. Typically, on those days, don't trade. If you must trade, use a reduced lot size or demo trade. Okay, so let's look at this analysis, Lekon. Lekon showed us a box, upside down box for a buy. That's the most recent analysis. That's the shoulder there. That's the IOFED there, 2024 levels. That's the gap of liquidity below. Exactly. Then it created fresh liquidity at 2027. The lows of 2027, there are triple bottoms there. Then it went to break structure to the upside. So price can go back into that fair value gap, which will be 61.8 of that level. And that is where it will take the buy. But if you look at it on the 1 hour, let's see the 1 hour. Now, look at it on the 1 hour. That's a proper box now, not upside down box, proper box for a sell. That's the shoulder that Lekon has marked. That's the grab of liquidity formed on the 8th yesterday. That's the grab of liquidity. No, Lekon, move back, not on the 8th. I'm talking for a sell now, a sell box, not a buy box. Exactly. That's your shoulder on the 7th. The shoulder was formed on the 7th. On the 7th. Exactly. That's the shoulder. Sorry, on the 6th. Yes, that's the shoulder. Then the grab of liquidity happened on the 7th. That's the grab of liquidity at 3 p.m. Then it broke structure. It broke the origin of the liquidity all the way down. Right? So that clear move down. Then now it has formed another shoulder. The shoulder was formed on Thursday, 8th of February, around 7 a.m. That's a shoulder there again. That's another grab of liquidity to the upside. And then it came all the way down. So price has now gone back into that level. It has mitigated that fair value gap, right? And it may start coming down. So I'm trying to show you, Lekon, and everyone, that it may not go to the first shoulder that was created because that one has already formed the lower low. Now go to the 3rd of February and see something very interesting. 1st of February, first. Go back some more. That's a shoulder on the 31st of January. That's a shoulder. 31st of January, that's a shoulder, right? What is there next to it? That's the grab of liquidity, the liquidity sweep. What happened after that? That's the break of structure, all the way down till exactly. So what happened from Monday? That's the pullback into the fair value gap. So what can likely happen? It can go all the way down because it has grabbed the liquidity. So in this kind of scenario, you add external factors like sentiment. So now what's DXY doing? So when you see multiple scenarios like this on a Friday, if you are not in a trade, look for something that has a clearer schematic or use sentiment. So let's see DXY. From that February 1st, let's see DXY. Just put DXY this exact time frame. So you can see Ivan Hyacinth said gold is a bit confusing. Kevin said gold is a bit confusing. Nobody said that yesterday. Nobody said that day before. So that should let you know that gold is actually confusing. So what should that tell you? Maybe you stay away from gold or you add sentiment. So we have sentiment like precious metals. Precious metal value flow model. Or you add sentiment like bonds and bullion value flow model. Or you add sentiment like gold versus fiat value flow model. So that same range, you can see that DXY is in a range. Today is a Friday. Stay away from gold. That's the long and short of what I'm saying. There will be days when the analysis is very clear. There will be, those are high probability days. There will be days where you can do an analysis for a buy, analysis for a sell. So except you know what you are doing and you have been trading for a while, then you can take those trades. So based on this, we've seen our shoulder, we've seen our grab of liquidity, we've seen it creating fresh liquidity now, and we've seen it is coming all the way back down to tap. All the way back down to tap. Now, the last thing I will discuss is when schematics fail. So look at February 3rd. February 3rd. Sorry, 1st, Thursday, no, January. Go all the way. That's a little, yes, there. That's a shoulder, yes or no? Please draw our box. Please draw our box. That's the shoulder. Draw it from the open to the wick. Exactly there to the wick. Then that's our grab of liquidity. And did it break structure? Yes, it did. Because it formed a low that was lower than the previous low. Yes or no? Then it went back all the way to the shoulder. What happened when it tapped into the shoulder? Do you see that it stalled there? Why do you think it stalled? Please answer. Why do you think it stalled? Why do you think it paused there? Type your answers, please. If you really understand the box setup, why did it, that kind of violent move, it entered the left shoulder and it just paused there. You can zoom in a bit so they can see that pause. Not just point of interest. Don't use standard terms. Just what was supposed to happen at that place based on the box structure. Just sell. Thank you. Thank you. So what happened? Why did it pause there? Because, oh boy. So it paused there is a sell, a reversal. So when the box schematic fails, which it did, it failed there. So you extend it all the way out. Extend it all the way out. We extend it all the way out. Can zoom out and extend it. That failed schematic becomes an area we are interested in for subsequent moves. So I will not be surprised if price, price is now creating liquidity. It has been creating liquidity since that schematic failed. If price taps back into that level, for what to happen? For it to go up. Oh. So this type of setup, you don't have to trade, just observe. Just observe. Just observe it and see where price likely wants to go. So that's why I said for the next 3 months, well, 2 months now, just be focusing on this box schematic. Shoulder, sweep, break of structure with fair value gap or momentum, going back, usually it holds. 7, 6 times out of 10 it will hold. But those times when it fails, that failure of the schematic is in itself a setup for a trend continuation. All right? Go and backtest this thing on higher time frames. Check it on Go Chart. If you don't have Trading View Replay, check it on Go Chart Replay and see how it behaves. All right? So right now, I'm just watching the market. The market can do anything. It's sentiment now, our value flow models that I'm using. With regard to structure and liquidity, I'm seeing clear buy schematics. I'm seeing clear sell schematics. It's only sentiment now that can filter it for me. Hope this has been helpful. This is why you should know at least 1 or 2 value flow models for the pair you are trading. Check the value flow models on the higher time frame, daily, 4 hour, and then see where price will likely go. I hand over to my guys on the floor. Who is the person that is standing blocking the value flow? Please, sir, how can we know when liquidity is consumed? All right, that's a good question. Please check YouTube if there are questions there. Look on the daily time frame. Let's see this dollar index on the daily time frame. Dollar index on the daily time frame. I want to answer your question to see how liquidity is consumed. Before you see how liquidity is consumed, know when that liquidity was created. All right, so look at this now. Just look at this clearly now. Which liquidity has been consumed here? Since December, which liquidity has been consumed? Nobody is answering me. Sua, answer me. Do you see those double tops there that Lekon is showing? There's liquidity beyond that. Has that liquidity been consumed? Exactly. So if it has cleared the liquidity at the top, where do we think it is going to clear next? Liquidity at the bottom. It goes from one liquidity to the next liquidity. So how do I know when liquidity is consumed? I go to the daily time frame. And I'm like, okay, has it cleared? Where is the next liquidity to be cleared? The next liquidity to be cleared is on 106.00. That's the next high where there is liquidity. Yes or no? Which one will be easier to do? So anytime you see liquidity, you say, which liquidity will it consume? Remember, liquidity is the fuel. If there's no fuel inside your car, it's not going anywhere. So price consumes liquidity and uses that liquidity as the fuel to consume the next liquidity. The question that we ask is, which liquidity below has it consumed that will be the fuel for it to target 106? That's the question I will ask. The only liquidity that is available for it to consume is below where? Where is the next liquidity it can consume? Lekon is already giving you the hint. 102 levels, exactly. So in my opinion, it has grabbed 104 liquidity. It has to come down and grab 102 liquidity, which will now be the lower low. Or sorry, the higher low. Then when it grabs 102 liquidity, it can now go and target 106 liquidity. After it grabs 106 liquidity, where is it going to come to? They can do a zigzag and show us. So price creates liquidity, consumes liquidity. Creates liquidity, consumes liquidity. Creates liquidity, consumes liquidity. It has consumed the liquidity. Okay, there, yeah. I'm saying that since it has cleared 104 liquidity, it may come all the way down without hitting 106. It may come to 103, 102 first before it has cleared that liquidity now. Now, that is a shoulder. The shoulder that was formed in December, it has swept it. All right? So I'm saying it may come all the way down. How do we know? Only sentiment. Value flow models can tell me now. Only value flow models can tell me now. Today's class was long, but was it helpful? Today's class was long, but was it helpful?
Yes, sir.
If there is anything you take from here, price creates liquidity. How you know there is liquidity? Double bottoms or double tops. Then it will consume the liquidity. Then it will now, after it finishes consuming that one, it will create new liquidity and consume. And the best way to know this is on the daily time frame. You notice I didn't say check for liquidity on 4 hour or on 1 hour because I can't know. But on the daily, I know that every day market has fresh sessions, so it can create and consume new liquidity. Now you can look at this thing on 4 hour and see the swing highs and swing lows where it has consumed liquidity. That's true. But the one that me I am most confident in is the daily, is the liquidity that is formed on the daily time frames. All right, over to you on the floor. What's the name of the tall gentleman there in the floor?
Destiny.
Destiny.
Mr. Destiny.
Hi, hello, how are you? Well done. Are you gaining value from being on the floor, or is it a waste of your time?
No, sir. It's very helpful, sir.
How is it helpful?
It has grown my trading skills, sir.
Okay. The FOMC, now the reason why I didn't discuss fundamentals is If we enter fundamentals, my brother, we're not living here today. Everybody will be confused. It will be confused. So that's why I didn't mention fundamentals. Once you start discussing interest rates, yes, you are right. It doesn't look like there's going to be a hike anytime soon, and it will make DXY bullish. But you see this thing, if we want to start PCCing it, we'll not live here. Everything I'm trying to do, everything we are trying to do in TDA is give you systematic approach, nothing subjective. Oh, see shoulder here, see sweep, see break of structure, see return to fair value gap. Oh, see external liquidity on the daily time frame. See opposite liquidity on the daily time frame. Those ones are not subjective, except you are blind. But you see all these fundamentals, we need to have dedicated classes for that, where CJ can tell us some stuff, Leko can tell us some stuff, and Abigail too can tell us some stuff. All right, guys, over to you. Sir Mike, thank you very much. Well done. Today is Friday. If you have not made money, close your chat. Go and prepare for the weekend. Not every day you make money. And if you have lost money, accept that this week is a losing week. And just take it like a man. All right, then. Cheers.
Thank you so much, sir. Question from YouTube.
Okay.
Joseph says, can we have a short class or explanation on that bus strategy? No problem. When you pay for FS Bootcamp, it's just 125,000. We truly would have a long class, definitely. And someone also asked, Samuel Nonso, I'm looking for a buy on GU. How do I enter since it is still retracing? All right, if you come earlier for this TDA,
we've done that. Just Leko, you have answered him. Everybody, have we answered that question? Please comment, yes, so you will not think we are being wicked. Have we answered that question? Thank you. So sorry, sir. Come early, eh? No verse. Are we still bearish on US 30? My brother, the US economy is growing, though. What we have is growth, increasing growth, and stable inflation. If you have increasing growth and stable inflation, that's bullish for stocks. So except it's a short-term sell. But we have three value flow models for global equities. We have global equities value model, we have risk on, risk off, and we have VIX. Not VIX, not synthetic VIX now. We have a value flow model for knowing about US stocks, global equities value flow model, RORO value flow model, and fear index value flow model. Thank you.
All right. Thank you so much. Thank you, everyone, for joining TDA. And it's been a very sweet time all throughout this week. Most, if not all, most of our analysis has been so helpful to you, like we've all seen. We've gotten, a lot of peeps this week, and you've enjoyed everything. Sorry, what's this? University of Forest Science. You mean TDA? Okay, can you use schematic used on TDA for this one? All right. Yeah, all right. Thank you, sir. Thank you, sir. All right. So that is it. Majorly, just make sure today is Friday. What you've made, all you've made from Monday, make sure you did not dash it back to the market today. Trade cautiously, use your proper risk management strategy, and at the same time, study this weekend, backtest. This strategy we've been using all through, backtest it this weekend and see how effective and profitable it is. Like we said, those who enroll for our ATM Plus, Android, iPhone, make sure you join us in class by 10 a.m. We'll continue again. Yesterday was a very good day. Everybody was so happy, trying to revamp the course back. So today we are going to have you on board again by 10 a.m. Our ATM cash flow training is also coming up in 2 weeks' time, and the price is 100,000 naira. Sunshine Scalping Plus 2 is there for 60,000 naira. And FS Bootcamp, if you want deep insight of what we've been discussing here, just enroll for the FS Bootcamp, 125,000. you get everything. And our value flow models are there. The one, the University of Forest Science, you just type now. If you want to do your PhD in that University of Forest Science, just enroll for value flow models. You're going to get it so that you get Dr. GU, Dr. GJ, Dr. anything, you get it there. You get point now. So just enroll for value flow model. It's just 150,000 naira. You get everything well there. Thank you. These are the price of all our courses. You are going to get it. And in the month of March, we are all coming to Abuja. Make sure you are there. We are going to communicate the venue to you soon. Prepare yourself, invite someone, noise it abroad and everywhere. We look forward to having everyone on board as soon as possible. Thank you, cheers, and God bless. Something sweet is coming up on Monday. You are going to get the best of it on Monday. Like, Monday is going to be fire back to back. Like, peeps, I don't mean Bono, like, good news from us on Monday. So see you on Monday. Enjoy your weekend. Make sure you withdraw today. If you are not withdrawing, delete the account. Thank you. Cheers and God bless.